9.1 Subsidiary ledgers and controlling accounts. We have 3 learning objectives. Number 1, you need to be able to distinguish among service, retail merchandising, and wholesale merchandising businesses. Number 2, you need to be able to identify differences between a sole proprietorship and a corporation. And number 3, you need to be able to explain the relationship between a subsidiary ledger and a controlling account. So first, we're just going through a bunch of terms. Merchandise is goods that a business purchases to sell. A merchandising business then is that business that purchases and resells goods. A retail merchandising business is a merchandising business that sells to those who use or consume those goods. So if you think of like Target is going to be a retail merchandising business. They sell to us, the consumer. We buy those goods and we are either going to use them or consume those goods. A wholesale merchandising business buys and resells merchandise primarily to other merchandising businesses. So there are businesses out there that they're going to buy large quantities of merchandise, and their purpose then is to sell those large quantities, break them up into smaller pieces, and sell them off then to other businesses, which would be a retail merchandising business that then sells it to consumers. Now, there are some wholesale merchandising businesses that do sell to consumers. If you think of like Sam's or Costco, those would be wholesale merchandising businesses. Corporations. A corporation is an organization with the legal rights of a person, which many persons or other corporations may own. Assets or other financial resources available to a business are simply called capital. When we talk about a corporation, we talk a lot about stock. A share of stock is each unit of ownership in a corporation. The stockholder then is a person that owns one or more shares of stock, and capital stock is the total shares of ownership in a corporation. Articles of incorporation are a legal document, or is a legal document that identifies basic characteristics of that corporation. This is part of the application submitted to the state to become a corporation. So before you can just say, oh, I'm going to start a corporation, you actually have to get what they call a charter from the state that you are going to be, your headquarters would be located in. So if we think of Target is considered a corporation. Now Target is based out of Minneapolis. So they got a charter from Minnesota that allows them then to become a corporation. It's almost like a license that legally grants them that opportunity to do business as a corporation. Subsidiary ledgers and controlling accounts, so more terms. A vendor is a business from which merchandise, supplies, or other assets are purchased from. A subsidiary ledger is a ledger that is summarized in a single general ledger account. A subledger is the same thing as a subsidiary ledger, so accountants are either going to call it a subledger or subsidiary ledger. An accounts payable ledger is a subsidiary ledger containing vendor accounts. So accounts payable ledger is an example of a subsidiary ledger. And then the controlling account is going to be the account in a general ledger that summarizes all accounts that we would find in the subsidiary ledger. So here's an example of a subsidiary ledger, our accounts payable ledger. So when we look in our accounts payable ledger, they give us a great visual here. These are all the pages within that ledger, and these are all vendors that we owe money to. Okay, so these we owe, and they give us the balance that we owe to each of those vendors. Now, the total amount of all of these vendors, the total amount that we owe to all of them, is going to be labeled here in our accounts payable. And our accounts payable then is our controlling account. So our controlling account gives us the total of our subsidiary ledger. Here's an example of a subsidiary ledger form. Now, this looks a lot like what we would see in our general ledger. The only really difference here is that we are going to see down here, we have a balance, and we have a debit and a credit balance. Up here, we just have a credit balance. Because when we think of paying a liability, we probably are not going to have a debit balance to a business. That means that we've paid them more than we owed them. So that more than likely is not going to happen, and that's why we have a simply credit balance column. All of our other headings are the same. We do see up here, instead of account name, we're going to label that as vendor name. And then here we see it as a vendor number instead of account number. Here they're just showing us then the balance in that account. And so they labeled that. Notice we've never put anything in the item column. The only time we will do that, well, there's a couple instances, but this is just, they're labeling this as a balance, and the check mark there, this didn't come from a journal. This was simply the balance that was in that account. Number one, what is the primary difference between retail and wholesale merchandising businesses? A retail merchandising business is going to sell to consumers. A wholesale merchandising business is going to buy and resell merchandise primarily to other merchandising businesses. Number two, what allows a corporation to own property, incur liabilities, and enter into contracts in its own name? A corporation, through the rights granted in its charter, then has the legal rights of a person. Number three, what is the principal difference between the accounting records of proprietorships and corporations? Proprietorships are going to have single capital and drawing accounts for the owner, because there is only one owner. A corporation, though, is going to have separate capital accounts for stock that is issued and for the earnings that are kept in the business. Number four, what is the relationship between a controlling account and a subsidiary ledger? The sum of the subsidiary ledger accounts is going to equal the balance of the general ledger controlling account. Number five, what column on a general ledger form is not on an accounts payable ledger form? Our debit balance is not going to be listed because it's very highly unlikely that we would ever have a debit balance to a vendor. That was the end of lecture. You can now move on to the work together.